Every construction project is underwritten by hundreds of insurance policies. On a single project, the client, members of the design team, the main contractor and subcontractors are obliged to take out a number of different insurance policies. The three main ones are: professional indemnity insurance covers claims of negligence against consultants and contractors, often stemming from conflicts over design. Contractors' all-risk insurance is for contractors working on site. It covers damage to works already undertaken, as well as the loss, theft or damage to any tools and equipment. And public liability insurance is taken out to protect against claims for error, omissions or professional neglect. But according to Martin Davis of the Specialist Engineering Alliance, seen here on the left, all these should be replaced by a single overarching policy known as Integrated Project Insurance, or IPI, that covers the client, its funders and the project team collectively. In May 2011, the government released its construction strategy, and under Section 2.28, it pledged to explore with the industry the use of integrated project insurance to support new procurement models. So, let's explore what progress has been made.
Martin, hello. Lovely to have you here. Thanks for agreeing to do this. Can we just start, please, with the basics? Why do we even need insurance on construction projects?
We need insurance primarily because there are various things that can happen on a project which it's difficult to avoid. First of all, it could be natural disasters. It could be earthquake, it could be hurricane, etc., those sorts of things. It could be vandalism, it could be material damage for various reasons, plant is dropped and things like that. And then on the human side, very significantly, there's the risk of mistake. At the worst, it would be negligence, but mistake, and those things will happen. The insurances are designed to protect the parties against those things, but the danger, of course, is that when you have many different parties involved, all protected by the individual insurances, that those insurances will not give an overall protection. One of the problems that can arise, of course, is if the procurement sets people at each other's throats from the beginning, which probably was what happened at Wembley, and then the insurances will accentuate the problem because they will all stand back, encouraged by their insurers to do so.
And Martin, what's the driving force of IPI?
It all started with Sir Michael Latham's report in '94, Sir John Egan's report in '98, then the Movement for Innovation, the Accelerating Change report, the Strategic Forum, and indeed the Integration Toolkit, which is on the Strategic Forum's website, which is all about how to achieve integrated teams and work in that way. So the driver is that, and we have to remove the barriers to achieving integration. One of the barriers is the liability culture and the insurances which are fragmented to mirror the old fragmented construction industry.
Right, and what's the cost at the moment of insurance for the construction industry?
To get to the overall cost, because many of those costs are hidden, they're hidden within people's overheads. That's the natural way it happens with the omnibus policies. To get to the bottom of that, we did a very detailed exercise about 4 or 5 years ago for the Treasury. And with the help of Davis Langdon and 2 of the major brokers, we took a typical project and calculated all the ingredients for 4 tiers, because all the subcontracting and sub-subcontracting, and then it was populated by the various premiums by the brokers, and that added up to, on normal risk, between 2 and 2.5% of project cost. That's the sort of order of magnitude of professional indemnity, contractors all risks and public liability policies.
Sorry, you just mentioned normal risk. Perhaps you could define normal risk for us.
Normal risk is where there are not abnormal elements that the insurers would load. So, for example, a consultant that doesn't have a decent record or a particularly dangerous site, etc. And the calculation that I explained doesn't include for excesses either. So it is normal risk and not including for excesses, a base figure.
Okay, and IPI, would be a single policy taken out by the client. What explicitly would IPI cover?
Integrated project insurance will be taken out by the client and will cover the client and all the members of the team. It will cover them against the risks that have normally been covered by contractors' all risks and third-party or public liability policies. It will also cover the risks that have normally been covered by professional indemnity policies, but it won't cover it in quite the same way. What it will do is to cover the cost of the project, the cost plan, and so if there is a problem on the project and it causes the cost plan to overspend, that is what it will be covering, and that's avoiding therefore all the legal and forensic costs of finding out who done it.
And as far as you can tell, what would the cost of IPI be compared with traditional insurance policies that we've just mentioned?
The insurers have agreed that the cost of IPI, and we'll talk about more detail about that later no doubt, will be 2.5% of the project cost for the pilot projects.
Way back in 2008, Constructing Excellence told the Government Select Committee on Business and Enterprise that too often insurance included redundant layers of consultant, contractor and supplier cover which often do not protect the client. The Select Committee also heard that around £1 billion is wasted every year on insurance cover that provides for the same types of risk. And insurance brokers Griffiths and Armour calculate that for every £1 paid out on professional indemnity claims, £5 has been spent on legal costs. IPI's supporters claim that under a single policy, such litigation would be significantly reduced.
So are you saying, Martin, that where IPI is used, there will never be the need for litigation or adjudication?
When IPI is used, there are some base rules, and the first rule is that the members of the team who join the integrated team do so on agreeing that they will not claim or sue each other unless there's fraud. Also, the insurers agree that they will waive subrogation rights. In other words, they will not come round behind the scenes afterwards if there's been a claim and claim from the party that they believe was responsible for it. So therefore, everybody is in what I call a virtual company. They're in a situation where they don't have to look over their shoulders. Therefore, the costs which people are allowing for at the moment for litigation and arbitration, which is very frequent, particularly on insurances, professional indemnity insurances, should be avoided. There may be disputes about what the cost of the project was, and issues like that could arise, so it would be very rash for me to say that there will be no litigation or adjudications, but the normal business case for them is removed.
Championed by the Specialist Engineering Alliance, IPI has also received support in principle from firms including AECOM, Arup, Shepherd Robson, Hoare and Lang O'Rourke. The concept of retentions and specifications will be very familiar to these firms and associations. However, under IPI, both, it seems, could become obsolete.
So Martin, what's wrong with specifications?
In principle, there is nothing wrong with specifications. Under the new model of procurement that we are discussing, there needs to be a functional specification which describes the need of the client and indeed what his priorities are. Is it sustainability? Is it fastest construction? Is it lowest capital cost? So in that sense, a functional specification is definitely required. Nothing wrong with that. But if we're talking about, as we are, integrated teams, then why would we need to have a specification for the consulting engineer to communicate with the specialist contractor when they are sitting side by side in what I call a virtual company? They can communicate and they can look at the functional need and they can start to address straight away what systems, what plant will fulfill that need. And of course, thank goodness, BIM has come onto the scene, and that is all about working together in a collaborative way.
And retentions, will they also go under IPI?
As you will recall, there was a select committee some years ago which recommended that retention should be looked at very critically and phased out. Obviously, it is very important that there should be focus on avoiding having defects, which is why people have had retentions in the first place. But with IPI, where the cost plan is actually insured, the client has the security of that insurance to pay for any remedying of defects. So therefore, there's absolutely no financial need to have retentions with IPI.
We've heard about the possible benefits of IPI, but how will it work in practice? The first stage is to define an upper limit. This is based on best practice benchmark figures obtained from recently completed comparable projects. Through improved procurement methods, IPI's backers say they can reduce this price by 15 to 20%. Pushing up against this is the cost plan. Reviewed by independent technical and financial assurers, the cost plan is drawn up by the integrated team. Risk allowances are also built in. In what Government Construction Minister Paul Morrell has described as competitive tension, the target cost is the figure sandwiched between these elements. The next stage, as Martin explains, is to assign a so-called pain-gain share to each member of the integrated team.
What we do at the time that we incept the insurance policy is we agree gain share, pain share arrangements. Those are not new. They have been done on Procure 21 projects, for example. And basically what we agree is how much of the gain and pain the client will take, typically something like 50% of the gain, 50% of the pain, and how much each of the members of the core integrated project team will take. Those will depend on how important they are to achieving the functional brief, but they will also depend on how affordable the gain share, pain share is. All we say is that they should be the same proportions for gain share as for pain share. And those pain shares add up to the excess under the policy. And the insurers then pay, subject to a cap, the overrun costs above the pain share. So everybody in the team knows that their pain, their loss, is limited to just their share of the pain share. Therefore, they can be much more open and honest about the building up of the target cost, because they don't need to hide away contingencies, which they have tended to do when they knew they would pay 100% above any guaranteed maximum price.
Right, hold on a minute. So are you saying that if an M&E consultant slows things up, the M&E contractor could be liable in effect for his muck-up? And in a similar vein, are you saying a glazier could be held accountable for work done by a brickie?
Let's take the first part of that question first, and it actually reflects the way that we do think at the moment. Whose fault was it? But if the design consultant for the M&E and the specialist contractor are sitting together working as one team, deciding which systems will meet the functional requirement, then it becomes very difficult to know whose fault it was. Indeed, each will have a very strong interest to make sure that between them they don't get it wrong, because regardless of who it was, they would each suffer their share of the pain share. So we are looking at a completely different model here, a different paradigm, where the two parties that you've mentioned are actually in it together. When you come to the glazing and the brickie, there's another issue to consider there. It depends on how important they are and how much proportion of the project they're doing. They might or might not be members of the core team. It's a management decision to decide how much to give, how much far down the line to put the gain share, pain share arrangements. And we would have clustering so that, for example, the M&E can cluster down towards the ductwork or the controls. We can do that. That's again a management decision. The same thing would apply. In principle, the glazing and the bricking are obviously extremely important to the project. So the decision, management decision would be how far down the line do you do that? If they are included, then they're part of the team, and yes, the answer would be the brickie could suffer a share of pain share caused not by him, but by the glazing, or by the M&E consultant, or by the architect, or by the client. We're in it together, and we all endeavour to avoid these things happening instead of blaming each other when they happen.
And presumably, Martin, any pain gain share would be dealt with after a certain decent amount of time, a defects liability period or something.
The gain share will be paid out depending on what it relates to. One of the key elements for gain share will always no doubt be how does the actual capital cost compare with the target capital cost. That will be paid out, that gain share or pain share would be dealt with as soon as the capital cost is known, i.e. very quickly after completion. The same thing would apply to any gain share relating to speed of completion, because we have gain share, not liquidated damages. If, however, there is gain share in relation to energy usage, say over 12 years of the project, or as Paul Morrell says typically 5 years, then each year it would be measured and the gain share would be paid out as appropriate each year. So each part would be paid out at the appropriate time. You don't have to wait for all of it till the end.
So Martin, how would an insurance company judge the risks of underperformance and overrunning on any given scheme?
There is a very good precedence for this risk assurance in Belgium. An organisation called SECO, which has been around since 1934, has been doing this, and its purpose was to get a clean slate for latent defects insurance at completion. And when they're involved, typically the insurance costs of latent defects come down 30%. So the risk is better and the cost is lower. That's the sort of win-win we're after. But the biggest enemy of risk is actually our flawed procurement practices. We talked about Wembley. If people are put in a situation where there's inadequate allowance for doing the project and they're not properly thought through, then they're effectively set at each other's throats. That is what will create the risks. They're human. They're not, or the Almighty is not the primary cause of risk on projects. It is flawed procurement. And that is the absolute base of this new model of procurement, to avoid that, and that will improve the risk for the insurers.
In 2008, IPI was due to be trialled at Southport General Infirmary in Merseyside, but the scheme ran out of funding and was cancelled. To date, the nearest the UK has come to seeing IPI in action are BAA's Terminal 5 at Heathrow Airport and the Defence Logistics Organisation's Andover scheme. Referring to a problem that arose while building the T5 control tower, BAA Project Director Tony Douglas said, "Normally the manufacturers would have blamed the structural engineers, who would have blamed the steel fabricator. At first they did just that. But the T5 agreement allowed me to say, this is my problem, and send them off to find a collective solution." Central to the much-heralded T5 agreement was an innovative insurance policy taken out by BAA.
Okay, so we've mentioned the Andover scheme and the T5 scheme. How similar would those projects be to how you would see a typical IPI project running?
Both Terminal 5 and Andover had two parallel project policies. The key is that they were project policies. A project contractors all risks and third-party policy, and a project professional indemnity policy. The former has been quite usual. We've had those for years on major projects, but a project PI policy has been less usual. So those two have sat side by side and have worked very well. They've helped a great deal because everybody is covered under those policies. The difference is that IPI, which has been developed from those, is that it is one single policy. And the primary difference is that it, instead of insuring the cause, the failure, the negligence, it insures the effect, which is the overspend of the risk-assured cost plan.
Now, reading in between the lines here, it seems that at the T5 job at least, the single policy was very much about control. BAA having control over its subbies and contractors and what have you. Is this something that SMEs and small contractors will be wary of?
There is the opportunity here for niche architects, for example, to be involved with projects in a way they can't at the moment. Sunam Prasad gave an address when he was president, which said that it was very sad that niche architects couldn't be involved with major projects because they couldn't accept the degree of liability that the prime architect needed to pass down. Here, there is no problem. They are able to be covered under the policy. And the same thing applies to SMEs in all the other aspects of the supply chain.
So with the aborting of the Merseyside trial, where are we now in terms of the government trialling IPI?
Government has now formally endorsed the model of procurement which incorporates IPI and has said that after discussion it should be trialled. We've had those discussions, and the current position is that the Cabinet Office is actively seeking pilot projects, and I'm visiting potential clients with the Cabinet Office in order to secure those in accordance with the programme, which is to start in the spring of this year.
But what of the insurance companies? To date, 2 leading UK insurers have expressed interest in IPI. However, the Association of British Insurers has declined to provide comment to this programme either for or against IPI.
IPI has got tacit government backing in the 2008 Select Committee. BIM is very much a feature of construction. Everyone's talking about collaborative working. Why hasn't it happened yet?
I think the difficulty primarily is that the operational managers who make these decisions about projects every day, it is very difficult for them to give the time and to be brave enough, bluntly, to depart from the normal way of doing things. I'm afraid that the business as usual is a very, very big inhibitor to change, and this is not the only industry that's found this. So a really major effort has to be made. Everybody has to see that this benefits them. This does benefit everybody. I mean, for example, for architects, for contractors, to know that however badly a project goes, their risk is limited to their share of the pain share, frees them up to be positive about the project and to concentrate on doing what we believe will happen, which is improving continuously more and more in the delivery of these projects.
Martin, thank you. That's all we have time for today. Thank you very much for coming in and telling us all about IPI. Thank you very much.
Thank you very much for inviting me, and if any of your audience knows of some potential pilot projects, I hope they will let me know.
Right, we'll bear that in mind. Okay. Well, thank you very much for watching. Until next time, goodbye.